If you're serious about making money, make sure you're subscribed to this channel. Based off of the game plan that I'm seeing, with the unique trading strategies that I've created, using the weekly chart, using the daily chart, dissecting the overall chart, we are currently setting up for the best setups at the best prices possible. I'm going to show you how to trade both ways. Where to buy call options, where to buy put options, how to capitalize on the overall bull trend, how to capitalize on the overall bear trend. And I'm also going to prepare you to not only day trade the best setups, but to swing trade the best setups. In terms of FOMC, it's normally a lot more volatile than how it was today, which means the market is going to have extremely high volatility heading into the rest of this week. And I have the perfect game plan for you. So I'm going to break down the game plan. Then in terms of the end of this video, I'm going to be recapping the overall trades that we ended up making inside of Team Roar. I ended up waiting until FOMC to trade today. And if you studied the overall 30-minute chart, the 30-minute candlesticks was a very similar pattern at very similar levels compared to yesterday. And I ended up taking advantage of that, going 4 for 4 on the day with a 100% success rate, buying put options. Multiple trades that I had on puts ended up going up multiple, 100%. Some of them went up 250%. With that being said, I ended up making multiple 100% profit returns on put options. Uncle Tio ended up swing trading Apple calls on September 16th. He held the calls. He's currently up over 1.3 million on the calls, making over 200% profit return. I'm going to be breaking down the overall trades that we ended up making today. As a whole, as a collective, we had a record-breaking day. Let's get straight into the analysis. So first things first, we're going to get into the money-making game plan. So what I'm going to do is I'm going to start off with the daily chart pattern that I'm seeing. And this is why I told members inside of Team Roar that the stock market is likely going to spike and have a very bullish day tomorrow. I made that very clear 10 minutes before the market closed. This was the reasoning behind that. So FOMC, in terms of today's overall price action, it was very similar compared to yesterday, just a little bit more volatile. So it's going to be in a sense like a delayed reaction. You're well aware in terms of the weekly chart, we're either looking for a massive crack below that 559, then it's going to flash crash to 549, or we break above all-time highs and start going into the 570s. Based off of how the daily chart is setting up, it is favoring the bears, and I'm going to walk you through this. So right here, as you can see on the daily chart, we have a green bullish candlestick. You're going to see this daily chart pattern is identical. And what we're going to do is we're going to dissect this heading into the rest of the week with the 30-minute chart to continue to capture these overall weekly and daily trends, right? I'm going to show you why tomorrow is likely going to be a strong bullish trend day, right? So you have this bullish candlestick right here. You have this bullish candlestick right here, right? You see the similarities, right? And then you have this red bearish pin facing to the upside. Then you have this red bearish pin facing to the upside, right? And then you have this red bearish pin facing to the downside. Then you have this red bearish pin facing to the downside. What happens the next day? If you look at the next day, the SPY has a small drop. It drops $1 under the previous closing price, and then it ends up closing very strong at the highs, retesting the previous day highs, retesting the wick. You're going to see it happen all the time on bullish trend confirmations. The SPY is going to try to retest these wicks. It does it on the 30-minute candles. It does it on the daily candles. So if we are seeing the SPY maintaining slightly under the previous closing price, if you're seeing previous closing price reacting as support, you're going to want to be buying call options because the market is going to try to have a strong bullish closing day to retest the highs of today towards this 568. Then, if that happens, I would take the chance, man. I would take the chance and I would swing trade puts. If we have a strong bullish trend day heading into tomorrow, I would swing trade puts 10 minutes before the stock market closes. Because if this pattern continues to repeat itself, man, look what's going to happen. We're going to have a massive gap down. And not just because of this daily pattern, right? Another reason why is we're due for an extremely high volatility move. And another reason to swing trade those puts, if the market has a strong bullish trend day heading into tomorrow, is just look at the overall supply and demand. Look at the overall price action. We are at all-time highs. We have so much resistance. We have so many false breakouts. We have so many gap reversals, right? This is going to be a great opportunity to likely swing trade puts, man. Just think about it. The bulls had so many opportunities to break above these all-time highs and go super bullish, and they failed to turn it into support. There's been some small breakouts, but they failed to turn it into support. And in terms of that overall trend, man, I saw some members, they did end up swing trading calls because I told them the market is likely going to spike tomorrow. They ended up swing trading calls, right? In terms of one reason to not swing trade calls, well, it said it can potentially drop $1 below the previous closing price plus theta decay. So if you want to play it safe and wait for a confirmation and buy calls cheaper, then you can wait till the next day, right? Or if you want to take the risk, pay a little bit more, right? And, take it, be in that situation where you're going to have to pay that theta holding overnight, right? So that's your choice in terms of what you want to do. You could take a starting position ad, right? Just giving you some information there. But as you could see, the SPY is already gapping up. So what does that mean? That means that this pattern that nobody else is fucking showing you, right, is already repeating itself. So when you see these trends and these patterns repeat itself, you have to capture the overall trends. So we're already gapping up. It's already having a bullish move. Last time, in terms of this daily pattern, it ended up topping at the highs and it ended up closing strong at the highs. So in terms of put options, we're going to be swaying away from put options heading into tomorrow. Now, if we are gapping up strong, there could be a great opportunity for put options early in the morning because that overall trend said the SPY can drop $1 below the previous closing price. So if we're having a massive gap up and we're at very strong resistance and we're getting a red bearish 30-minute candlestick, a red trend reversal 30-minute candlestick, then we're going to want to buy put options. Just be aware that it could be against the overall trend. So it could be one of those situations where you get a very nice flash crash for the SPY to drop back down and fill this gap below at 561.40, but the overall trend on the day could be bullish. So based off of what I want to prepare you is the overall day can be extremely bullish. If you are buying puts, you could be fighting against the overall trend. So in terms of the game plan for puts, you can try puts at the market open if the SPY is having a massive gap up. Look for pre-market resistance and then look for strong resistance. So we have strong resistance right here towards this mid 566, and then we have strong resistance above 567 to 568. If you're seeing 30-minute candlestick bearish confirmations right before the market opens in the pre-market, if that, last 30-minute candlestick from 9 to 9:30 a.m. is bearish, if you're seeing reasons to buy put options at the opening based off the extended hours 30-minute candlesticks, then you could try at market open. I would just encourage you to do that to make sure, I would encourage you if you're going to do that, to make sure that it's at major resistance, very, very high resistance, the levels that I gave you, right? Now, in terms of the best play that I have for you, is going to be to buy call options using the gap close reversal trading strategy. The unique gap reversal trading strategy that I've created, that I've trained over 2,000 students with, you're going to want to buy call options at the previous closing price, 561.40. 561.40 is going to be the true best price to be buying those overall call options, right? So in terms of the overall SPY, 561.40 is going to be your best price possible to be buying those call options. And in terms of a slightly lower level, you can keep an eye on that 561.50, right? So that's the overall game plan heading into tomorrow. Now, if we are closing very, very strong, bullish at the highs, you can try to swing trade puts. I'm likely going to do it, man, because it's just like the bulls had too many opportunities with all this high volatility to break out. If they wanted to break out and turn it to support, they would have fucking done it already. So why not take advantage of the high volatility where it's just sitting, closing at the fucking highs for another bull trap? You got to put yourself in a situation where the odds are in your favor. If you stack and dissect the overall chart and you're seeing many great opportunities to continue to buy put options, while everyone else is hoping for this all-time high breakout to react to support, put your odds in the overall favor. Look at how many days we've crashed from those overall levels, right? So if it doesn't work, that's fine. Think of the amount of times we've done this already. If you went back and you watched the previous videos on how many times it works. Like I said, I did it today. I went 4 for 4 with the overall put options, right? So that's going to be tomorrow's game plan, man. And in terms of how we take advantage of, strong bullish trend days, because that's what we're going to be focused on tomorrow. We're focused on that strong bullish trend day. The way we take advantage of that is very, very simple. You can see right here, there's resistance on the 30-minute chart at 562.50. Break above resistance. Once SPY drops back down to that previous resistance, you're going to want to buy calls. Look for bullish patterns on the 30-minute chart. Use the 10-day 30-minute chart. Look for bullish patterns, right? And then you can see right here, SPY has a breakout above this resistance at 563.33. Strong breakout, drops back down to retest. Previous resistance reacts to floor. Double bottom, green bullish 30-minute confirmation, retest the wick. So in terms of the stack, this is resistance, right? Break above resistance, drops back down, double bottom on the 30-minute chart, bottom wick, green bullish 30-minute candle. Another stack is, I told you, it likes to spike back and retest the wick if there's a bullish trend. The daily pattern is a bullish trend. The 30-minute chart is currently a bullish trend, which means that it's going to try to spike back towards the highs of this wick, of this wick, of this wick, of this wick, right? And then in terms of the pre-market, look for reasons to be bearish. Just be careful with put options because it can be an overall bullish trend day. That's why I said if we're having this massive gap up and we're opening up high towards resistance, wait for the SPY to crash. In the meantime, you could try to fight the overall macro day trend with a nice scalp on puts. I mean, think about it, it's just common sense. If the market is having this massive gap up and the history shows that we're going to likely go back to previous closing price and have a small drop under it. And, it's just due for a pullback in a sense anyways, because it had such a strong gap up and the daily chart says it's due for a pullback. It's just you have to be a little careful because it can have a strong bullish closing day. That's why I said in terms of specific timeframes, just for the morning on puts would be the main focus if we're at the major resistance levels. And then, like I said, oversold levels, buy the call options, look for opportunities to buy call options heading into tomorrow. This is the game plan a day in advance. We're going to have new levels and new plans once we get more candlesticks. Once the chart is beginning to develop more and change more, we're going to begin to adapt. We're going to begin to capture new trends, new bull and new bear traps. But like I said, man, the main focus is an opportunity for puts heading into market open. If you're seeing a 30-minute candlestick confirmation in the pre-market, then get it at open. If you're seeing a 30-minute candlestick confirmation within the first hour, right, towards market open, first 30-minute candlestick, right, 9:30 to 10, and then 10 to 10:30, those first two 30-minute candlesticks, you're seeing bearish reasons at key resistance, you could try scalping puts, but it's got to be early. Just make sure it's early in that sense, because tomorrow's going to be an overall strong bullish day, so I'm going to be looking for those opportunities, right? So you can see right now, SPY's having this massive breakout. So what's the new level to buy the dip? The new level to buy the dip would be right here on this overall bullish trend, 564. The previous level was at 563.30. So when we confirm that a day is going to be bullish, we use the breakout and then the retest that drops back down to that previous resistance level, buy the dip using the 30-minute candlestick confirmations, right? And then we also stack the chart, right? You're well aware this is resistance, reacts to support, reacts to support. What's another reason to be bullish? The daily chart. What's another reason to be bullish? It's going to try to retest these wicks. It likes to retest these wicks, right? I even showed you with the daily chart. So you have to dissect the chart and stack everything in your favor. The more you have stacked in your favor, the better. But you have to be aware in terms of the deck that you have stacked up, what works best in the deck. What is most powerful? Like I said, it's very powerful in terms of buying puts because it's just putting the odds in your favor along with all the stocks, the 30-minute bearish confirmations, right? The weekly chart. We use the weekly chart to confirm there's going to be good opportunities for puts, the gap reversal strategies. Dissect the chart and stack everything in your favor. Once you have the deck, you are being patient and disciplined to wait for the cards to appear within the market to trade the heart of cards, right? You got to be patient. Once you have that perfect setup that looks absolutely phenomenal, right? You're seeing like 10 reasons to get in on that overall trade. Seize the moment and use your intuition as well. So with that being said, that's the game plan for tomorrow. Now, just to give you some bonus levels, like I said, in terms of all-time highs, it's just going to keep on trying to fake out on these all-time highs. So if you're seeing bearish 30-minute candlesticks, you can try to buy puts, but you got to be extremely careful heading tomorrow because it could be a very strong bullish day, right? Best case scenario heading to tomorrow, we flash crash it open, go to 561.40, gap reversal, and we're buying call options at the dip towards the previous closing price and towards $1 below the previous closing price, measuring that overall move, man. You're looking for 30-minute bullish candlesticks at these wicks, 561, right? Tons of support, gap reversal level. And then also at 560, tons of support, gap reversal level. And then the lowest level for calls heading into tomorrow is going to be 559. We are going to have two gaps that are waiting to fill below heading into tomorrow. And once we start to fill these gaps, if it happens, the SPY is going to start to have a reversal likely. Use the confirmations. We're not just blindly buying into a daily pattern, right? We're getting more confidence that the pattern is going to work because it's already gapping up. It's already fucking working, right? So if we're getting that flash crash, the 559 gap right here, previous resistance right here has not been tested, gap and go, drops back down to retest, buy the dip. It's gonna reverse, right? I'm known for trading reversals. Now, in terms of the gap reversal, 559, the other gap reversal, 561.40, measured the overall move on the daily chart. We can go about $1.50 under the previous closing price. So 559, 560, and 561.50 are the best levels possible to buy call options heading into tomorrow, right? Now, just to prepare you in terms of Friday's overall price action based off what I'm seeing now, if the market closes strong at the highs, I'm going to take that opportunity likely to swing trade put options. But if we're getting like some kind of crazy all-time high breakout where this is closing above like 571, 572, I might sway away from that. I want it to close around like 568, ideally, if not 569 to 570. If it's closing super strong in the 570 range, I might sway away from that. But like I said, best opportunity to swing trade, if you didn't swing trade the calls today, would be to swing trade the puts tomorrow if we're closing towards 568. If it's closing a lot more strong than that, I might sway away from it. But overall, it's still favoring the bears for that swing trade on Friday, right? Now, just to show you this overall weekly chart, right? So we've been analyzing on this weekly chart, right? Capturing this pattern. The pattern is still relevant and it's still been working in very similar cycles, right? So you can see right here in terms of the overall candlesticks, I'm going to walk you through this. We have this green weekly candle in the middle. We have this green weekly candle in the middle. Then you have this, red bearish overall pin. You have this red bearish, you have this overall pin, right? Slanted downtrend. And then in terms of the weekly chart, that was the wrong overall pattern. Here we go. This is the correct pattern. So we have this green weekly pattern, this green weekly candle right here, green weekly candle right here. And then we have this red pin right here. And then you have this green pin right here, starts to retest. And then you have the slanted downtrend. Then you have the slanted downtrend. Then this is where history really starts to repeat in that similar cycle. And we captured this whole trend buying the dip into this bull rally last week. If you go back and you watch the previous videos, we have this red bearish overall weekly candle. We have this red bearish overall weekly candle. Then the next week, we have a small gap up on the daily chart with a strong closing bullish week. It literally closed $1 below the weekly highs. And then you could see the same thing happen next week. We had a strong bullish week. It ended up closing $1 below the weekly highs. Then you can see the next week, the SPY ended up closing strong at the highs, right? It had a small breakout above the previous week. And as you could see, we had a fairly small breakout for FOMC above the previous week, but tomorrow is likely going to be a super fucking strong bullish day. And then in terms of the overall week, it did have a massive drop in price, dropping back nearly towards that week's lows, but then ended up closing strong. So in a sense, the daily chart is contradicting the weekly chart now. So right now, it's favoring more of that daily chart, right? The contradiction would be if the SPY has a strong bullish day heading into, tomorrow to close very, very strong at the highs, then it's supposed to drop at some point, and we still didn't have that massive drop. So instead of closing strong on the week, it could potentially close very, very weak on the overall week. In terms of the daily chart, the pattern says if we get this strong daily close, we can have a massive gap down. So in terms of another confirmation for Friday, if you don't want to take the risk and swing trade, if we're gapping down on Friday, it's going to be put options, man, for a bearish trend day, because that's going to confirm it, right? We're gapping up today. So if we're, since we're gapping up today, if the SPY ends up bottoming towards previous closing price, or if we have a strong bullish closing day heading into tomorrow, then that's going to give me all the confidence in the world as a day trader that if SPY gaps down the next day, then it's going to be a bearish overall trend day, man. So see, that's the beauty of day trading in a sense, man, because you could just wait for the gaps to form. You could wait for the bulls and bears to get trapped, and then you could wait for the proper confirmations at the levels. Like I said, man, you know, if we fucking gap down Friday, it's going to be a very easy day trading opportunity for put options, in my opinion. So that's the overall price action analysis that I have prepared for you, right? And then in terms of just other levels, you know, just to be aware of, if we do go under 559, breakdown, react as a resistance heading into Friday, we're looking at a very strong bearish day in a move to the next overall level, which is going to be towards this like 550 to 549 overall zone, right? That's going to be the overall level, man. And then, man, it's just, that's going to be the overall game plays, right? And then in terms of Friday, no swing trades for Friday's market close. The swing trade opportunity could be for tomorrow. Now, in terms of the opportunities, man, let's get into this. So inside of Team Roar, man, you got to give credit where credit is due. I got to give a big shout out to Uncle Tio, Keaton Win, Forbes 30 under 30, multimillionaire. Got to give a big shout out to this guy, man. He absolutely crushed it, man. Look at this. He ended up buying Apple calls September 16th at 11:23 a.m. He ended up buying these Apple calls. 220 strike, September 20th expiration, man. Look at what he ended up doing with this position on calls, man. He ended up swing trading this overall position. Look at what he did today, man. And he's also been killing it on Upstart and Zillow, man. Not only has he's been making some nice quick scalps for like 50, 100% returns at times, but he's been swing trading, man. He's been making some phenomenal swing trades and some great calls on Zillow and Upstart. For those of you who are in the chat, man, he's learned everything it is that he's doing in real time. But on his Apple calls, he ended up making over 1.3 million on these Apple calls, man. It's fucking crazy, man. Everything it is that he's doing is alerted in real time inside of our secured private organization with many multimillionaires. Like I said, man, we have a lot of people within the shadows, man. We have a multimillionaire who's been following me for a long time. He doesn't even talk into the chat. You know, we talk privately. We're not even in the chat. We have many multimillionaires in this private organization. We have many members. They don't even talk. They've been with us for over a year now. And I'm telling you, man, we're absolutely crushing it, man. So big shout out to Uncle Tio for making over $1 million on that overall trade. That was a 200% profit return on the overall calls. And then he's been crushing it on Upstart. He's also been crushing it on you know, Zillow. He's been giving out great information on that, right? I'm going to be breaking down the overall trades that I ended up making on the day. I ended up going 4 for 4, making multiple 100% profit returns, just buying SPY options. I'm going to recap the overall price action in terms of what I was seeing. I'm just going to be covering some of the basics. I'm not going to be going over everything it is in terms of the reasoning behind these overall trades. But like I said, man, it had to do with the weekly chart. It had to do with the daily chart in terms of the foundation of the trade. I explained to you the reasons why I was overall bearish towards major resistance. Now, in terms of breaking it down with the 30-minute chart, it had to do with yesterday's pattern and yesterday's overall price action. So in terms of the overall trades that I ended up making, the first trade that I made on the day during FOMC, I ended up buying 564 SPY puts at 150 a contract. I ended up exiting these puts at 245 a contract for a 60% profit return. That was the first win on the day. Now, the second win, I ended up buying 561 SPY puts at 69 cents a contract. I ended up exiting these puts for a 100% plus profit return at 134 a contract. Now, in terms of the third trade, I ended up buying SPY 564 puts at 58 cents a contract. I ended up exiting at 123 a contract for nearly a 200% profit return. In terms of the fourth win, I ended up buying SPY 563 puts at 45 cents, and then I ended up exiting for a 100% profit return, going 4 for 4 on the overall day. So, in terms of breaking down the overall 30-minute chart, I like to focus on the 10-day 30-minute chart, right? And then in terms of foundations, I look for the weekly chart, I look at the daily chart, I look for reasons to build a foundation in terms of helping me confirm if it's going to be a bullish or overall bearish trend day, right? So the weekly and the daily chart helped me in terms of setting the overall levels to buy put options. The daily chart patterns gave me reasons as well. The gap reversal trading strategy, the major all-time high resistance, putting the odds in your favor in terms of the stock, right? That's just some of the basics to the foundation. Now, in terms of executing that actual trade, right? It had a lot to do with yesterday's pattern, man. So In terms of yesterday's pattern, this is where I want to bring awareness. You can see this green candlestick right here. Compare this green candlestick right here to this green candlestick right here. And then you can see you have a sloppy, slow uptrend. Then you have a sloppy, slow uptrend. And then you can see the SPY starts to pull back. The SPY starts to pull back once it retests this wick. Once it retests this green wick, it has a trend to the upside. It has a trend to the upside. So you see the similarities. Now, this is going to be a lot easier to read. Let me show you this. This had a lot to do with it. So I showed you a pattern that began in the pre-market. Now this was a major reason. The red, green, red pattern. Now, in terms of pattern recognition, it's not just about the colors. You have to understand how the candlesticks are closing. The way they look should be very similar, and the way that SPY is moving. So in terms of this situation, with the red, green, red pattern, do you see how it looks like a stairway? You see how it's kind of slanted to the upside? It's a slanted to the upside, slanted to the upside. So take a look. Red, green, red. What happens after that? After that, the next 30-minute candlestick opens up bearish and the SPY sells back off to previous closing price. And then you can see red, green, red, very similar. The candlesticks look identical. Look at this, man. Look at these candlesticks. These candlesticks look identical. Obviously, the candlesticks are going to be bigger in terms of today because it's FOMC day, right? With the high volatility. But look at the candlesticks. This was an exact replica to yesterday's chart at very similar levels. You can say in a sense that the levels are nearly fucking identical because, again, it's just expected in terms of the measured move, nearly identical because it's just expected to have a bigger move on FOMC, right? But look at these fucking candlesticks. And I already showed you that pre-market trend that was already repeating itself, right? Look at this, man. These candlesticks are identical. So the point is, if this trend is repeating itself for 90 minutes, and we already know the red, green, red could be a bearish pattern. It could be, again, just because candlesticks are bullish or bearish doesn't mean that it's going to be bullish or bearish. That's why you have to have some sort of foundation and you have to confirm that it's actually going to work. Sometimes bullish candlesticks are bearish. Sometimes bearish candlesticks are bullish, right? But the point being is, man, you have to have a foundation. You have to stack everything it is within your favor and just look at this overall move, man. The SPY opens up on the next 30 minutes, sells off previous closing price. So that's the main reason why I was buying put options on the opening of this 30-minute candlestick right here at 3 p.m., man. Look at this. This was the main trade right here. You go to 3 p.m., you're going to see a lot of my trades. I enter right towards the opening of these 30-minute candlesticks. Look at this. At 3 p.m, I'm in on 561 puts. I'm in on put options as soon as this 30-minute candlestick opens. The SPY sells all the way off to 561.60. I'm selling into the dip. I'm capturing my moves because the risk of holding for a massive win during FOMC is it can spike right back up and wipe out all your gains. That's why you should be setting profit stops and selling into the moves, right? It's okay to leave some runners for the bigger gain if you want to risk it. That's fine. But look at that, man. That's exactly why. Red bearish candle. And you could see it didn't have a red bearish close this time, but it had the massive sell-off. And I sold the move. I was not greedy. If it's going to have that big of a crash, I'm selling. Even if it's expected to, close overall bearish and really sell off later into the day. But that was the main reason for puts, man. Just seeing that pattern. And those were the main reasons, man. And then again, you just have this very overall trend reversal candlestick. That was another reason for doing puts, that the SPY is likely going to try to retest this overall wick and drop back to the previous closing price. It was selling off all day towards that previous closing price and it was dropping back towards the wicks. So it was using yesterday's chart to take advantage of those put option opportunities. At the bare minimum, you should have captured that overall pattern, man. You should have said red, green, red, stairway, slanted to the upside, red, green, red, stairway, slanted to the upside, right? It's literally fucking identical, right? So you should have said to yourself, you should have been in on put options on the opening of this 30-minute candlestick, and then you sell into the move, right? And then in terms of the overall next trade, this is a green trend reversal 30-minute candlestick. Well, yesterday when SPY was forming those overall candles, it kept retesting the wicks, and we just have so much resistance and so much failed breakouts. And another reason for puts, it just had to do with 1-minute patterns, man. 1-minute patterns that I was seeing on the chart, like this is overall very bearish, man. When you're having this slanted downside overall move, and in terms of breaking down overall moves, when 30-minute candlesticks are expected to be bearish, or even a 1-minute trading strategy, when you're seeing key support like this crack and sell off hard, once it spikes back up to that previous support, if you're seeing red bearish candles starting to drop, you're seeing lower highs, right here. These are the lower highs after it drops from turning that previous support into resistance, right? Previous support reacts as a resistance. If you have a confirmation that 30-minute chart's going to be bearish, you can buy puts on that. But if you have other foundation, other things to stack, you can buy puts as well. But on the 1-minute chart, overall pattern was just extremely bearish, which was the reasoning to buy put options. So that was the overall recap in terms of the trades that I ended up making. Everything's alerted in real time. For those of you who are serious about trading, alongside with multimillionaires, for those of you who are serious about gaining access to a 0-date options trading alert system, it's the first link down below within the description. We have a 90% plus success rate doing this. We are known for buying cheap, far, low risk, 0-date options, and we buy them far out of the money, like 3 to 5 strikes out at times. And we're known for selling them in the money for the biggest percentage gains within the market with a 90% success rate. In terms of the system that we've created, we do not use stop loss. You can put in your max risk per trade into the contracts because they're so fucking cheap, right? So we put in our max risk per trade at most. And in terms of that situation, the most we lose is our max risk per trade if the contracts go to 0 and expire worthless. Not having a stop loss gives us an edge to hold the contracts for the entire day. Sometimes we enter a play, it drops 50%. We call that a dead play when it drops 50%. It can come back to life later in the day and go in the money, and we could turn that 50% unrealized loss into a massive percentage gain. And we are also known for adding to winners. When we are up 10, 15, 20%, that's very small for us because we trade far out of the money option contracts and we're known for selling them deep in the money for the biggest percentage gains. So when we're up a little bit, like 10, 15%, we like to add to winners. If we're getting a winning confirmation when we're up a little bit, it makes sense to add to the wins to increase the winnings to average our cost up just a little bit, and then we set profit stops. We set profit stops to have a strong secured foundation that we're not going to go green to red. We move the profit stops up as the trade is working in our favor to ensure if the market has a big move against us and we're not selling the moves, we get stopped out for our profits, keeping the overall bulk of the move. If you are serious about trading alongside with us, we have a phenomenal community with many members, man. We have tons of members. If you're serious about trading with us, it's the first link down below within the description. You can start trading with us tomorrow. We will all be there within the chat tomorrow. We're going to absolutely crush it executing these game plans, man. So with that being said, I'm going to be signing off. I will see you guys within the chat tomorrow.